Hello, everyone. Walmart just reported earnings, biggest retailer in the world, and it's time to discuss. Let's see how they did. So, right here is just a brief overview. We'll go more in depth in following pages here. Just to start off, this is the initial report that came out. A non-GAAP EPS of $1.27 per share, which is a beat by 5 cents a share, and a GAAP EPS of $1.26, which beats by 4 cents per share over the estimates. And GAAP being the short for generally accepted accounting practices. It's just a different way of how they record that earnings per share. So beat on both EPS, which is fantastic. My concern coming in here would have been profit based, so it's good to see that that's actually sorry. Seems there's a little something in my throat. I apologize. Anyways, it seems as if that concern obviously was alleviated here, which is good news. And here's where we hit the big hitter here, which is a absolute shocker. A revenue of $130.4 billion. Obviously, it's billions. World's largest retailer. They don't play around in millions. Billions. Hundreds of billions. And that is a 2% increase year over year. That is crazy. Crazy numbers. It's a company as big as Walmart is to post, as you can see by their beat of $1.08 billion, they weren't expected to increase more than a little bit less than 1% in terms of their revenue. And they shattered that goal. They absolutely shattered it. So they beat by $1 billion, which is obviously significant when you're talking about billions. That's such a significant difference. Obviously, it only translates to around 2%, but such a well-established company, it's fantastic. And obviously, it says that shares down 0.3% pre-market. That's obviously on light volume, and that didn't really matter much. Overall, this led to, as we'll see here, whenever this was posted, Walmart was up 5%. I believe it ended the day somewhere around 7% up, in a time where the market got absolutely hammered on Thursday, whenever they reported. And Walmart was the biggest gainer of the day, which is kind of a shocker. You never expect to see Walmart on that chart, but Walmart was the biggest gainer yesterday, posting somewhere around a 7% to 8% increase. After they'd fallen previously in the past couple weeks, they'd fallen down pretty low. And right now, today, we're sitting somewhere around that 114 range that we were previously before any of that decline. So that's very exciting. Let's get into a couple of these numbers. So comp store sales increased 2.8 in the U.S. versus a 2.5% consensus. Obviously fantastic. Increase your comparative sales. Transactions were up 0.6%. Always good. Anytime you're growing business is fantastic. And ticket price was up 2.2%. Which anytime you grow ticket price, obviously great. And that's where you see that increase in revenue. So very exciting. Very exciting news. And the only thing we see that's not necessarily as good would be a decline in international sales. So international sales declined 1% to $29.1 billion. Obviously not exactly what they're looking for, but the vast majority of their business is done in the United States, and that's kind of where they're pushing right now. So obviously their international segment will be figured out. They just have to iron out some details regarding it. So overall, I don't find that much of a concern. The Sam's Club comp sales were 1.2% versus a 0.6% consensus. Sam's Club being their membership-based sister company. which is always exciting. Pretty much direct competitor to Costco. They're a wholesale company. So a business that a lot of people saw not necessarily increasing, but it's a good sign that they are, just because every segment of Walmart's business is just keeps on increasing. And as a total, which is crazy numbers still to this day, e-commerce sales up 37%, which they've been posting somewhere around 30 to 40% e-commerce growth for probably the last 4 or 5 quarters, which is crazy. It's crazy amazing. They've been pushing online so significantly, and obviously the threat of Amazon is always lingering. So this is their way to compete, and I think they're doing a fantastic job of competing as well. So I think it's very, very exciting that they're still posting increases like this. Our operating income fell to $5.6 billion. Obviously, it's not exciting that operating income fell, but that's kind of just what happens. They're pushing a little bit more spending on things like their e-commerce platform. So that's just an expected side effect. So it's not a significant drop by any means. So nothing really to look forward. And you see here also they're laying out their guidance, which their guidance is very good. Anything listed there is very, very nice. So their EPS pretty much in line in terms of guidance, but it's higher than the previous guidance they'd given out for the year. So obviously, increase in guidance gets me more people buying. So now I'd say we'll go ahead and a lot of these big companies, they release slides, a slideshow to go along with their earnings. We'll go over that real quick. We're not going to play around with this. That's too small a text. We don't really want to play around with that. So let's go right ahead in. We don't read the fine print here. So this is just a little bit of their updated guidance compared to their original. You can see a comparison between the two. So they're updated. You see in there they have they kind of decreased their guidance for Sam's Club in terms of comp store growth, but they kept their same growth as far as their Walmart branch is concerned. So obviously they said toward the upper end now as opposed to where previously they didn't. So that's exciting. So we're going to have no change in terms of that e-commerce growth expected of 35%. That's what we're looking for. International sales are looking a little bit less than what they had expected previously. And their operating income would be a slight decrease to slight increase. And that'd be including Flipkart, the transaction, purchasing the company, online retailer in India. So that's exciting news, obviously, for them. And we see similar effective tax rate, a little bit lower. Obviously, still part of the side effect of the new tax bill that passed a few years back, lowering corporate tax rate. So that's good for them. And they do not account for any extra expenditures that weren't previously thought about. So it looks like around $11 billion they're going to be expecting to spend for the year. And obviously now they're going to get into difference in revenues between the quarters and year to date. Obviously, for the most part, we're seeing very good numbers here, positive, exactly what we're looking at. Membership and other income would be more like that Sam's Club realm. They're membership based. So for the quarter, they saw a change of 2.1%. Year to date, they still see a little bit of a decline, and their operating income sees a little bit of a decline, and their operating income on a constant currency basis is similar. So overall, exciting news there. So we'll scoot on from there. Their gross profit has declined just a little bit. Nothing major. That's just an expectation when we saw them push for that e-commerce. So in the cost of increasing revenues, sometimes you take a hit on profit, and that's kind of the phase they're in right now. So I don't believe it's anything to really worry about. It's Walmart. They'll always be around, and people are always going to flock there for purchases, no matter what. Here we talk about inventories on hands and their accounts payable, money that they need to pay, to whether it be investments, whatever it is. We can skip past that. Operating cash flow, a little bit of increase, nothing major. Free cash flow down a little bit, just due to a little bit increase in expenditures. I talk about dividends here, which they're keeping their dividend pretty consistent. When Walmart announces a dividend, they announce it at the year beginning. Starting in February, they announce it for the full year, all 4 quarters, which is always cool. Always exciting to me. Walmart U.S. sales. This is where we see a nice little increase here in their U.S. sales. So increase in ticket price too, as well as their e-commerce growth pretty significant too. So gross profit decreased a little bit, as we spoke about earlier. Nothing major. And here another thing to look at, net opening of 1 superstore, and they closed 1 neighborhood market. Obviously Walmart is really focusing on trying to make every store a superstore now. A majority of Walmart stores already are Walmart superstores, so it just has included with all their fresh departments and pretty much everything you could need all in one spot is the point of those superstores. So they're increasing their locations for grocery pickup. Obviously their new Boon, their new service to get people in. Just pull up, order online, pull up to one of the parking spots and check in, and people will bring your stuff right out to you. They're also working on a program to actually involve delivery as is. So not only just like delivery of normal general merchandise products, but also food products. They're working on having drivers to deliver food products as well that they can deliver in your house. Obviously, there's a lot of concern and things to look at with that, but they're working on ironing out those details. See if there's anything else significant here. So obviously, increase in health and wellness, grocery, and general merchandise. Overall increase naturally, as we saw such an increase in revenue. It's good to see every segment of theirs increasing. Toys, part of their toys push definitely was just due to the closing of Toys R Us. Obviously, those sales flocked to Walmart naturally. So that's kind of where they saw that. Their main goal is going to be on grocery and fresh foods. That's the way Walmart wants to push now, because that's what keeps people coming in. You increase traffic, you increase customer loyalty, as long as you keep your fresh departments looking good. So fresh is going to be the focus for them. They want grocery and fresh foods to be their goal, and they want everything right in terms of that. Increasing that is what keeps people coming into the store, and by proxy, people coming into the store means they buy more merchandise. So that's obviously what we're looking for. So I think that's really all that I think that's major. Obviously, we have sorry, I don't know why I just blanked. Oh yeah, International Sam's Club here. Not the significant part of the business. We can go into Sam's Club highlights. So TEO, Technology Office Entertainment, a little bit of a decrease, low single-digit decrease. Health and Wellness, Everything else was increasing as far as home and apparel, consumables, fresh freezer cooler. Obviously, their focus as well. They want fresh to be there. As a wholesale company, what's going to keep people coming in on a weekly basis whenever they buy merchandise that can last you a month? If you buy a thing of giant 10-pound tub of pretzels that's going to last you a month, it's not going to keep you coming in. But what will keep you coming in is fresh products. So that's going to be their focus still too. So I think that's all I really plan on going into today. Overall, fantastic quarter, and they're still seeing an increase. A lot of analysts are now jumping on the bandwagon, as they do. I hate analysts personally. All they do is follow the bandwagon. It's literally all they do. I don't think most of them actually know. I mean, obviously they know a thing of what they're talking about, but it's 100% at the end of the day. They have no real basis for. They may have math supporting their thesis, but they at the end of the day they just follow trends. So if a company like Walmart beats earnings significantly, they may have previously stated that they thought it was going to be a $90 stock in a year, but now all of a sudden the street high analysis is that it's a $135 stock in a year. That's their price target. So can't believe a thing an analyst says. I'll get more into that obviously in a different video, but overall, very good quarter for Walmart, and thank you for watching. Bye.